Hello there. Welcome to another episode of PhysicianEstate podcast. This is your host, Dr. Harsha Mule, owner and operator of PhysicianEstate platform. I am podcasting to you today from Miami, Florida. PhysicianEstate is a physician-owned and physician-operated real estate platform directed towards doctors in USA. We provide free real estate resources and investment opportunities to physicians. We facilitate physicians to make wealth and keep wealth. You are currently listening to podcast 13 of PhysicianEstate. In this episode, I will be talking about tax benefits of real estate investing for physicians. You might have already heard or read about this famous saying more than a few times. Real estate investments have a lot of tax benefits. In my personal experience, this phrase is always mentioned with a non-specific follow-up that does not give much information on how, what, why, etc. In this chapter, you will learn the different tax benefits of real estate investing for physicians. Real estate investments are one of the safest and most reliable sources of wealth generation. When you make profits from any business-related investments, it is obviously subject to taxes. Real estate investment-related expenses, however, qualify for a lot more deductions compared to other businesses. The end result being more money in your pocket. As an example, if you invest $100 into stock market versus $100 into real estate rental property, although you may make $12 per year gross income on both investments, after taxes you probably end up taking $8 home from the stock market and $11 from the real estate investment. This is due to the real estate related deductions leading to much reduced taxable income. Let's find out why. Tax benefits of real estate investing for physicians. Let's assume you own a bunch of rental properties that make $100,000 per year in rental income. What I mention next is a sample of tax deductions that can apply for rental income. If the total income per year is $100,000, these are all the possible tax deductions that you can make. Property taxes, $8,250, depreciation, $13,500, property insurance, $4,500, mortgage interest, $27,000, maintenance and repair expenses, $11,750, travel-related and car expenses, $5,000, utilities like telephone bills, etc., $2,000, real estate-related conferences and education, $3,500, business food expenses and entertainment, $4,500, home office expenses, $6,000. Overall, if you deduct all these expenses from your total income, the net taxable income is only $14,000. In the example that we talked about, you can see how the $100,000 rental income was eligible for multiple tax deductions and the final net taxable income was only $14,000. So instead of paying taxes on $100,000, you pay taxes only on $14,000. Now let's talk about deductions. One of the primary tax benefits you get in real estate investment comes in the form of deductions. Based on the nature of your property you own, tax deductions can come in several forms. This can be in the form of mortgage interest, operating expenses, maintenance, property tax, property depreciation, business-related food expenses, business-related travel and car expenses, business conferences, etc. Next, let's talk about long-term capital gains. Generally, if you are holding a property for more than a year, you qualify for long-term capital gains. When you sell the property after holding it for at least a year, the profits you make on the sale of this property will be taxed at a long-term capital gains rate as opposed to short-term capital gains rate. Long-term capital gains are taxed at a lower rate compared to short-term capital gains. Short-term capital gains are taxed at normal income tax rates. For the year 2019, long-term capital gains are taxed at 0% if they fall below $39,375 of taxable income. They are taxed at 15% rate if they fall above the $39,375, but below $434,550. They are taxed at 20% rate if they fall above $434,550. Next, depreciation tax breaks. Even though the value of your real estate property increases over time, IRS allows you to take depreciation deductions. Depreciation is taken on an yearly basis. It is a powerful tax write-off strategy. You qualify for depreciation only if 1. You own the property, 2. If your property generates income. Now, there is a lot more to know about depreciation, however, it is beyond the scope of this article. All you need to understand is to find out if you qualify for it, and if you do, make sure to sit down with your CPA and have them hash it out for you. Next, let's talk about 1031 exchange. A major tax break that you can gain on your real estate investment comes in the form of 1031 exchange. This tax code helps you to defer taxes or pay zero taxes for now on your capital gains. This is done by providing evidence to the IRS that the money for the property you're about to buy came from selling another property. If you can prove this, the IRS will not charge anything on your capital gains for now. You are not eliminating the tax here, but instead you are deferring it to a later date. Please listen to the prior podcast number 11, for detailed discussion about 1031 exchange. Now, let's talk in general a few key points about benefits of investing in real estate. 1. Stable source of income. The primary advantage of investing in real estate, buying a real estate rental property home versus investing in real estate syndication, is that it provides stable cash flow. If smart choices are made during investing, the value of a real estate property almost never depreciates unless there is a market crash, and so you may rely on it to provide a stable cash flow. Point 2. Long-term security. As a real estate asset provides a stable source of cash flow, it can be a major benefit in the long run. Say you are thinking ahead and investing in several real estate assets so that after a certain period of time you can rely on your properties to get a certain fixed amount of annual return. In essence, a real estate asset can be a source of long-term financial security. Point 3. Tax benefits of real estate investing for physicians. Massive tax benefits come attached with investing in real estate. These tax benefits have been created to encourage investors to invest in real estate market as it has proven to be good for the economy. Point 4. Appreciation of value. A real estate asset is generally used as a long-term investment, as the value that appreciates over a long period of time provides a higher return. Number 5. Immune to inflation. A real estate asset does not depreciate in value with inflation. Rather, the value increases as inflation increases. This provides an excellent opportunity for people looking to invest in real estate, such as investors, to not worry about economic fallout. Now, if you know of any other creative ways of tax strategizing by investing in real estate, please let us know. Subscribe to our newsletter at PhysicianEstate.com and get in touch with us. Well, that should bring us to the end of the topic. Thank you for listening to another episode of Physician Estate Podcast. In the next episode, we will discuss about H-1B visa status. Physicians who are on H-1B visa status, are they eligible to open an LLC and invest in real estate? To receive more information on real estate resources for physicians and to get updates on real estate investment opportunities with Physician Estate, please subscribe to our newsletter and do not forget to take advantage of our 2 new eBooks on our website. Signing off for now, this is your host Dr. Harsha Mule. Until next time, make wealth and keep wealth. Disclaimer: I am not a legal advisor or investment advisor. The content in this podcast is not investment advice. This is my personal blog, and all the content found here is for informational, entertainment, or educational purposes only. It should not be construed as personal investment advice.